It's Wednesday, May 18th, 2022. I'm going to be very upfront with all of you right now. This is not going to be a very positive video. It's going to be quite disturbing. So if you're looking for something positive and uplifting, this probably isn't going to be the video for you, because right now, right here, we are going to talk about reality and what is happening to the US economy and what is about to happen. So let's start out with some of the news today. I jotted down a bunch of notes. Got a lot of things printed out here. I'll try to get through it as fast as I can. Dow drops 1,100 points for its biggest decline since 2020 as the sell-off this year on Wall Street intensifies. This was the 7th worst day for the Dow Jones in history. Powell says the Fed will not hesitate to keep raising rates until inflation comes down. All of us need to be getting ready right now. We're going to be feeling some pain. I don't care how prepared you are, how much money you have. Everybody is going to feel some amount of pain. So many people have no idea what is happening right now, and many have no idea what is about to happen. There is nowhere to hide at this point, ladies and gentlemen. Everybody is going to feel the pain. And of course, we're going to see things spill out socially. And I just talked to a friend of mine in law enforcement today. Obviously, it's no shock. Crime is absolutely surging out of control. But let's talk about some of these numbers today. Dow Jones down 1,164 points. That's a loss of 3.5%. S&P down 164 points, a loss of 4%. NASDAQ down 566 points. That's a loss of nearly 5%. And the Russell 2000 down 68. That's a loss of 3.7%. We got some very concerning data today. Dollar Tree, shares of Dollar Tree down 17% earlier today. This is earlier today. I don't know where the numbers are right now. They could be worse. They could be better. Dollar General down 12% today. Target down 27%. Walmart down another 7% as it was down double digits yesterday. Amazon year to date is down 35%. Remember all these people telling us that all the stores are closing because everybody's just ordering everything on Amazon. Amazon down 35% year to date. And as I was watching the television today, watching some of these financial channels, it's interesting that as they're trying to cheerlead these markets, trying to get the suckers to come in and buy the dip, they're blaming all this volatility and disruption on leadership, on shortages, on wars, etc. And yes, some of that is responsible for this, but they never talk about the real reason we are seeing what we're seeing right now, why we're seeing this massive inflation, this massive volatility. And that is because the Fed has printed money to infinity. All the QE, the 0% interest rates, the ultra low mortgage rates, all created and done by the Fed, which nobody wants to blame. Now, all of these analysts, all of these hosts, all of the guests had a great time riding this all the way up when the money was free, when all this funny money and all this QE, helicopter money was flooding the markets. And people were literally just making money, just guessing what to buy. You could buy anything and make money, right? Just pick something and it was going up. It was that easy. But now that reality has come, now that it's time to pay the piper, nobody likes what's happening. And now everybody's blaming everybody, but they're not really blaming the real reason. And the truth of the matter is the Fed has created, for the most part, this disaster we're seeing now. Yes, you can blame leadership, you can blame wars, you can blame shortages and supply disruptions and all that. But at the end of the day, most of the blame falls on the Fed. And now we're believing that the Fed is going to be able to fix this. Do you really believe that the Fed is going to be able to fix this? I'm going to tell you right now, in my opinion, raising rates 25 and 50 basis points is not going to fix this. The only way to fix this is they need to start raising rates 1 full percentage point minimum at every Fed meeting right now, maybe even more than that, maybe go to 2%. Something's going to blow up here. It's either going to be the US dollar or it's going to be the stock market and housing market. But there is no way out of this now. We are going to feel extreme pain. All these people that got suckered into the FOMO are going to pay a huge price now. Think about these people who did cash out refis to buy cryptos, to buy stocks, people that bought homes at the top of the market. They're going to get absolutely crushed. Here's what Walmart, Target, Home Depot, and Lowe's tell us about the state of the American consumer. That on CNBC today. I'm going to tell you what it's telling us. It's telling us that the consumer is broke. The consumer is tapped out. You can no longer squeeze much more blood out of the turnip. We are now really in a very, very difficult place. And the consumer has run up so much debt, has just watched whatever savings they had has been absolutely crushed. The credit card balances are skyrocketing. Now wait till they begin to lose equity in their homes. Everybody felt wealthy. Everybody was rich because they had equity in their homes. That's the next thing to get hit, in my opinion, is the housing market, the next shoe to drop. Households are now spending an estimated $5,000 a year on gasoline, this on CNBC today. That's up from $2,800 a year ago. So nearly double. The average household now is spending nearly double what they spent a year ago on gasoline. Much of this being charged on credit cards. And the question, again, what happens when the bills come due, when those credit cards have to be paid? And you know as well as I do, most of these people are paying the minimum, paying the bare minimum on their credit cards, multiple credit cards. And they're carrying huge balances now. And we're going to see big trouble arise out of this debt. People are heading deeper into debt at the worst possible time. The recession has already begun. Do you really need 2 quarters of negative GDP to tell you you're in a recession? You know it's all manipulated. You know we're in a recession right now. Most of you would agree we're probably in the beginning stages of a depression. And we're going to see another problem, and that's going to be layoffs. JP Morgan sees gas prices hitting $6.20 by August. This will be game over for the average American. If the national average is $6.20, that means California gas would be over $8 a gallon, and we would see right here in California probably $8.79 diesel prices. It is game over for most people at this point. You will not see traffic. You will not see a lot of people even going to work. It'll be too expensive to go to work. Prices at the grocery store, the prices at your Walmart are going to absolutely accelerate if you see the national gas average anywhere near $6 a gallon. And they're saying $6.20 by August. This would absolutely crush the economy. Another article on CNBC, weekly mortgage demand from homebuyers tumbles 12% as higher interest rates take their toll. Mortgage demand tumbling 12% week over week. Applications to refinance a home continued their landslide, falling another 10% week to week. I spoke to a lender today out of state, and he told me he believes we will see the 30-year fixed rate anywhere from 7 to 8% this summer. Going to absolutely devastate the housing market. CEO outlook dims sharply with more than half expecting a recession ahead, survey shows. No shock. But the writing is on the wall. The engine is overheating on this economy right now, and it's about to blow up into a million pieces. And unfortunately, a majority of this country is not prepared. A majority of this country has no savings. A majority of this country really has no skill set and is not prepared for what is coming. People are going to wake up one day and they're just not going to even know where they're at. And all they're going to want to do is blame somebody. And the advice I can give all of you today, and this is just how I see it, is there's going to be no time to blame anybody for this disaster. It is going to be about surviving this disaster and even prospering during this disaster. Okay, we are heading into a depression, ladies and gentlemen. It's plain as day. Most of you see this. There are still people out there in denial. I cannot believe anybody out there now does not see what is happening. This is a complete meltdown taking place, and people are really, really going to get hurt here. They're going to be wiped out. Again, wait till the equity begins to evaporate out of the housing market. So many people thought that they were wealthy and rich because their home was going up 15, 20% a year. So many people thought that they were rich because they would look at that computer screen and see that 401k just going up and up and up. But nobody really questioned why all this was happening. It wasn't because of a booming economy. It wasn't because of a booming job market. It was all because of all these artificial injections and low rates and extremely low mortgage rates that created this massive bubble. And now there's going to be a huge price here to pay. And, you know, a majority of this country are going to pay a huge price. And the question is, how do we get out of this? Will we get out of this? How long will this downturn, this depression last? Will it last a year, 2 years, 5 years, 10 years? I can tell you this. It's not going to just last a few months. This thing is going to last years. We are going to be in a very, very bad place economically here for years. Netflix lays off 150 employees as the streaming service contends with big subscriber losses. People are cutting this stuff out. They're going to cut off their cable. They're cutting off Netflix. They're going to be cutting out things that they really don't need. Why? Because they need to eat. Massive layoffs are coming from a lot of companies, ladies and gentlemen. They're going to begin to cut the fat, and they're going to shrink down to survive this. And many people are going to lose their jobs. And this begins another problem. How are they going to pay those mortgages? How do they pay the rent? Cisco crashes 20% on catastrophic guidance. Biggest maker of computer networking equipment, a $200 billion company. $40 billion wiped off of its market cap like that. How much worse can this get? Bath and Body Works shares fall as retailer cuts profit outlook due to inflation. They expect to take a hit, get this, of between $225 and $250 million from inflation this fiscal year. That is $75 million more than they planned. Lowe's sales decline as cool spring weather weighs on demand for outdoor products, down 13%. They can blame the weather all they want. You and I both know why they're down, and that's because the consumer is broke. U.S. housing starts, permits plunge in April as mortgage rates soar. Building permits tumble 3.2% month over month, and housing starts were down, I think, about 0.2%, so pretty flat. Going to get worse, though. The Fed's $2.7 trillion mortgage problem. This was on Axios. I was reading this this morning. Very interesting. February 2020, the Fed owned $1.4 trillion in mortgage-backed securities. Then came QE during the health crisis, and so that number shot up to $2.7 trillion. The policy contributed to ultra low rates. Now the Fed wants to shrink its holdings of mortgage-backed securities. They want to shrink the balance sheet. If people don't want to sell their homes or can't sell their homes, these mortgages will stay on the Fed's books longer. If the Fed sells mortgage securities that pay low rates at a time when rates are much higher, it will incur big financial losses that reduce the funds the central bank returns to the Treasury. Plus, the selling would likely push mortgage rates up further at a time the housing industry is starting to feel pain. Bottom line is this, according to the article: the Fed's actions fueled a housing boom. As it tries to withdraw that support, it could be bad news for housing. So we'll see how that plays out. And I want to share one last article here, maybe two more articles. And this one comes from Bloomberg. Sri Lanka defaults hint at trouble ahead for developing nations. Surging cost of fuel and food have sapped nation coffers, it says. They have defaulted on $12.6 billion of overseas bonds, another warning sign to investors in other developing nations. It's an ominous sign of things to come. Now nations are collapsing. And who are the investors of these bonds? 15-hour power cuts in Sri Lanka right now. No fuel. Violence escalating. The Prime Minister, get this, the Prime Minister of Sri Lanka said this: the reality is we don't even have $1 million. How could things get to this point? Nations now defaulting, and how many U.S. banks, hedge funds, investors invested in these bonds? I don't know. Maybe none, maybe some, maybe a lot. I don't know. But we know that we're going to see other nations defaulting. And remember, the whole global system is connected. This may not be a big deal, but what if there's another dozen Sri Lankas with a lot of investors invested over in these countries? What happens when they don't get paid? And how does that affect us? How does it affect the U.S. investor? Maybe your pension is invested in some of these countries. One last article titled, "All Those Celebrities Pushing Crypto Are Not So Vocal Now." These celebrities, so we've seen them on TV, they were very, very vocal pushing these cryptos. Many of the trolls that I saw in the comments have completely disappeared. And we know now for a fact that when things get bad, that these are not safe haven assets. Yes, is gold down? Yes. Is silver down? Yes. But not to the degree that this stuff is. And how many of the thousands upon thousands of cryptos now no longer exist? They've gone to zero. They're gone. But watching something go down 60, 62%, 63%, literally in a month or two, not safe. And these people who borrowed large amounts of money out of their homes to buy this stuff, big, big trouble. And many people are going to find out what it means to be upside down in their homes, trapped in their homes, unable to sell, unable to get out. But again, so many people lost so much money. And I will say this about gold and silver. Silver being very volatile, but I think it's great to have for barterability. And it's definitely going to go along for the ride with gold. Gold and silver are going to go up when they need to. We know that they've been suppressed on purpose, while these kind of things have been pushed up on purpose with celebrities and athletes and the FOMO and all of that. These things have been pushed up and people have bought into them. Okay, to me, they're Ponzi schemes. I don't care if you buy them, you don't buy them. I'm not touching this stuff with a 10-foot pole. But gold, still in the 1800s with all this volatility taking place. And when people figure out that there is nowhere else to turn to, that they don't want to be holding paper, they don't want to be looking at digits on a screen, when people figure out what the central banks already know, what countries already know, they're going to buy gold. You want to be holding something physical, something tangible, something with a 5,000-year history, something the world recognizes as real money, something that is untraceable, something that is unhackable, and that is gold. And yes, silver is going to come along for the ride. But these are things that you can get to, things that you can touch every day, things that are physical, things that have no counterparty risk, okay? This stuff, what we're seeing in these markets, I think the best thing, and I don't give financial advice, but the best thing you can do is get as far detached from the system and get as much money out of the banking system that you can right now. But people, you haven't seen anything yet. It's going to get much worse. And I don't care if the Dow Jones shoots up 3,000 points tomorrow. What we're seeing right now is already a telltale sign of what's to come. It is a barometer. It is a canary in the coal mine. It is a massive warning sign that something is broken, something is overheating. And to wake up one day and see these markets going down 2,000 or 3,000 points is not impossible. We are watching these markets bleed. And They're going to continue to tell you to buy the dip, but one day the dip ain't coming back. It's going to keep dipping and going down. Today, they're telling you everything's on sale. You should buy. It's a once-in-a-lifetime opportunity. Do you really think this is the low? Again, I don't care if the markets explode tomorrow and the Dow Jones goes up 2,000 points tomorrow. Good for it. These markets are so fake, so detached from reality, so detached from the real economy. Buyer beware. Buyer beware. This is the time to not speculate. This is the time to protect wealth. This is the time, if you have some cash, to sit back on the sidelines, keep your powder dry, and get ready. Big sales are coming, but this thing has a long way to go down. Be safe out there. Be careful. Walk close to God. Thanks for watching.